If you're a DSO still trying to stitch together 5 different vendors to run your front office, you should definitely check out Flossy. They're an AI platform built for DSOs where every agent works together. Head over to flossy.com/ADSO to book your free demo today. Hey everybody, welcome back to another live episode here at the ADSO Summit. Today I have Colby Catania, the managing director at one of the greatest investment banks in the history of investment banking, Houlihan Lokey, with us. And Colby, thanks for coming. You and the team have been attending the summit for several years. Is there anything that kind of strikes you this year that's different than years past?
I don't think so. I mean, it's felt like the European attendance has continued to grow, as our team internationally has continued to develop, a deeper coverage effort, across Europe. We've definitely seen them show up in force this year, so that's exciting to see. Tone, I feel like the conference has been pretty consistent, feels like this year relative to last year or so, just given market dynamics, but not a ton outside of that.
Yeah, and are you hearing any... if you had to say one or two comments or thoughts from members or vendors you're talking to, is there anything that kind of rises above that is consistent?
The key question is what's next? You know what I mean? Where is the category kind of going? And I think, this isn't new news, but we've been in a period of sort of depressed M&A activity now for a couple of years, and I think whether it be doctors, executive teams, they're all focused on, what is going to sort of catalyze this resurgence of activity in the space. And, there's some ideas, I guess, that we have, but it's probably going to take some time. So that's been pretty consistent common thread.
Yeah. What's next? Maybe with a few minutes or so, what do you see as kind of the likely next steps or solutions that DSOs need to be thinking about as they continue to grow in the marketplace?
Look, I think this couple year period has almost created a dynamic where, most businesses have needed to look internally, focus on operational initiatives, and in my view, in a lot of respects, build better companies. It felt like folks were getting rewarded for a long time, almost just aggregating assets, building larger companies, not necessarily better ones with real, distinguished value propositions. And so I think in some respects, the market as a whole has caught on to that. People are focused on how to generate now durable organic growth. They're focused on doctor alignment. They're focused on delivering on all the things that they essentially promised their doctor partners from the beginning. And so I think on the one hand, that's a good thing. I think what's really going to catalyze some acceleration in the market is, a strategic shows up, with interest in the category. We see one or more, public exits, in the near to sort of medium term, which I think will happen. There's a couple of folks that are on path for that. Technology is another aspect that we've been pretty focused on. And, I think if you think about investor interest in the category, they now can underwrite technology in a meaningful way whereby, you actually have a margin expansion story to lean into. And that starts to make the math work a little bit, better relative to where we've kind of seen margin trends the last couple of years. So, credit markets as well, I would say, as things continue to trend in the right direction there, cost of capital continues to come down a little bit. I think it's going to, create a little bit more flexibility and opportunity for people to engage. But, without one or multiple of those catalysts, I think it's going to be some time before we see some meaningful improvement.
Got it. When you walk the showroom, you mentioned technology. So when you walk kind of the showroom where we are now and seeing all the different types of tech vendors, how important is that to investors to see the technology that can, do they take that into consideration when they look at investing?
For sure. I think, it's really going to be captured in multiple, and it's also going to be captured in an investor's willingness to engage. I think there's been a little bit of a binary consideration for folks over the last couple of years, whether or not they'll even spend time. And so I think if you had a real technology story, and a value creation plan that, isn't just an idea, but something that you've actually generated some level of a track record that you're heading in the right direction. There's some evidence of that showing up in your P&L. I think investors will, latch onto that and lean into it.
So, final question tied back more kind of this summit. What's been kind of your favorite part about participating this year?
Okay. The executive session presentation yesterday was great. I think to get to that, audience and, share perspectives on what's going on in the market in one kind of 30-minute shot was productive. But it's always good to come out here, through, an event like this and just get sort of your annual catch up with groups and, get a good pulse of what's going on in the market.
Excellent. All right. Well, Colby, thank you for all your guys' help and support, and safe travels back.
Appreciate that.
Hey, everybody. Welcome back to another live episode of Thank You from Flossing. We're coming at you from the 15th anniversary summit here in Chicago. Really great to have Christopher Moxon, who's managing director and partner at the Boston Consulting Group. They do tremendous amount of research, data, and have been really interesting to talk with Chris and see his presentation. So Chris, welcome. Thanks for coming.
Yeah, great to be here.
So before we get into some specifics about kind of your particular focus, this is your first time coming to ADSO.
My personal first time here.
So what are some of your takeaways from here? What maybe say, like, what did you expect, and did you meet expectations, or is it a little different in a better, different way?
Yeah, no, I mean, we've been to a lot of other dental conferences, and I think that this one is really great in the sense that it's an intimate group of people. It's a very open, accessible group of people. The networking has been really fabulous. The learnings that you can have we're in this solution center right now, and you've got this great mix of vendors that have really targeted, like, pointed solutions specifically aimed at DSOs. And then you've got the CEOs of the DSOs walking around on the floor as well. And so, yeah, it's been a really good experience.
So were you pleasantly surprised at kind of that collaborative level of engagement between vendor, DSO, and
I think absolutely. Everybody's here is looking to do the same thing, right? Which is elevate the dental market, provide better patient care ultimately, and work on growing the industry. A lot of the solutions that you see on the floor here today are things that we've been advocating for around, how do you better use AI within the dental practice? Then how do you also use it on the support side to lower your costs, help drive patient volume, help drive better outcomes? And so that's been a great finding from walking through here.
That's awesome. So let me just ask some kind of specifics, on your work. So obviously, you do a lot of research, looking at a lot of strategic trends. Could you share with us, from your perspective, what are the most significant trends that you're seeing in private equity-backed dental platforms, and where do you expect the industry to go from here?
Yeah. So I think, fundamentally, sitting below everything is a provider market that's ultimately growing at 3-4% per year. And I think that can kind of get lost a little bit sometimes, particularly when we're talking to investors, because everybody's focused on a lot of the things they read in terms of news headlines at the moment, on some of the things that are maybe more balance sheet issues in the dental industry. But really, you've got a pretty healthy underlying industry. And then when you look at it from a patient penetration point of view, the ADA puts out a statistic, and we've backed that up with more than 7,000 patients that we've run a survey on, that says 55% of Americans visited a dentist in the last 12 months. And so you've got
Say that again, 57 don't go to a dentist.
55 have.
55 have, and then 45 have.
And so you've got this white space of folks that are disconnected from care for whatever reason. And you've also got a huge sort of potential tailwind coming from how can you better integrate dental and medical, and what's the overall benefits for all systemic health. So I think from a provider point of view, we're very bullish in terms of like what that future market looks like, and some of the specialties are growing even faster. So oral surgery is a market that we expect to. It's been a more challenged market over recent years, mostly driven by consumer financing, but we expect that to really come back. And so DSOs that have that sort of specialty exposure will get that advantage, right? And those who don't will get the average. But then sitting behind that, I think we've got a PE investor base that is going to become a lot more discerning about which platform they're buying. And I think at the heart of that really sits around operational standardization. And when you've still got this very large untapped white space of unaffiliated practices today, but very few of them fit in the this is the target band that I'm looking for as a platform. So I think you're going to have folks saying, well, how do we scale this platform? And I think a lot of that's going to come through de novo strategies. It's going to come through maybe buying smaller DSOs, but making sure that the fit between those two things is correct. Because I think the idea that maybe as in the past has I wouldn't say plagued the industry, but certainly been a challenge for the industry, has been how do you put these lots of disparate practices together and then kind of do nothing with it.
Right. So do you see consolidation occurring within a lot of these DSO platforms? And I'm glad you mentioned that the market is still fragmented, because when I talk to policymakers, I always like to say this, is like, this market is not consolidated, and consolidation is not necessarily a bad thing, particularly when it actually allows greater access, more synergies. It's not as if there's 2 or 3 platforms here, right? Like, so it's like, I know a lot of policymakers are always like, oh my God, consolidation, that means there's going to be higher costs, all that other stuff. That's not the case here. But do you see that happening? And like, maybe if you do see that happening, what would some of the consolidated entities kind of look like in your mind? Like, where are there kind of like opportunities or synergies?
Yeah, I think so even just when you think about the industry as a whole, we think there's more than 100,000 unaffiliated, basically solo practitioners that, sort of create the tail of this market. And most of those practitioners are not going to be super attractive for a DSO to bring in. I think we're going to see 2 interesting things that might start to happen. One, in that tail, how do you actually create almost like an incubation mode where you can say, right now you're a sub-$1 million practice, but there's things that we can do to help grow you to the point where a DSO might be interested in affiliating you. And then I think that you're going to see another piece, which is in the mid-market today of sort of between the, let's say, 50 and 250 practices.
By the way, didn't mean to interrupt. I love 5 years ago, we would say mid-market was like 15 to 35, but I agree with you now that just to show how the industry is growing, it makes our point.
Yeah,
it makes our
that's
point.
Right.
I didn't mean to interrupt, but
no,
anyway, sorry.
And that's particularly when you look at the, every year we update our list of DSOs, and we have to keep moving more players to our top row.
But I think it speaks to like how this industry is resilient and growing. But sorry, anyways, you're saying between the mid-market, those 50 to 250 range.
I think you're going to see some of those coming together. I think even just this week you saw 3 of the groups coming together as one. And so I think you're going to see more of that. But I think, it has to be done with a real logic behind why we're doing it. We're not just building scale for scale's sake.
Right.
We're building it because we know we're going to be able to get back office synergies between it. We know that there's going to be an operating model that's going to work. And we actually have a model that's also going to work for the dentists as well, in the sense of, are they incentivized for the right things? A lot of false promises were given to docs in this industry.
Right.
It's creating some headaches for operators now. And I think a sort of more level-headed approach to that, as well as, dual incentive structures from both holdco as well as practice equity will be the thing that ultimately wins.
Makes sense. Awesome insight, love it, and couldn't agree more. And I do think we have to make sure that the docs are seeing the value too, right? Because of some of the economic headwinds and some of the equity recaps, that impacts not just the business side but the docs, and that's obviously something we need to think on. So final question, maybe 1 or 2 key takeaways from your first ADSO Summit.
I think the takeaway for me has been the openness of everybody to share at this summit, and vendors who and software players who are really interested in sharing with some of their learnings. I mean, you've seen actually really interesting reports that the Planet DDS team and the Henry Schein One team has been putting out into the market, and people starting to really pay attention to a lot of that and take action based on that. I think there's been a ton of openness from DSOs to really learn, and just the engagement from my perspective to not just talk to these partners, but also folks who serve adjacent spaces as well. So that's one observation. And I think the second observation that's been really interesting from this summit has been the international component. DSOs around the world are facing the same challenges, the docs, the growth agenda, the consolidation journey that they're on. And this particular summit, bringing in international CEOs of other DSO platforms has been really interesting information sharing.
Excellent. Well, Christopher Moxon with BCG, thank you for having us, and thanks for those who are tuning in to hear this really great conversation and looking forward to it. So thanks, Chris.
Great. Thanks a lot.
Thank you. Too many DSOs are paying for 5 different tools that don't talk to each other. Flossy fixes that. One platform for patient communication, outbound conversations, call center analytics, schedule optimization, and insurance verification. All connected, all automated, purpose-built for dental groups. Visit flossy.com/ADSO to book your free demo today. All right. Hey, everybody. Welcome back to another live segment here at the ADSO Summit, dentistry's main event. With me today is managing partner Jeremy Krell from Revere Partners. Jeremy, great to have you on.
Thanks, Andrew, for having me. Appreciate it.
Of course. So you've been at a lot of summits over the years, and I'd love you to kind of give your thoughts of like how have you seen this event evolve, and particularly how do you see this year's event as different from past years?
Yeah, so I've had the good fortune of being an industry partner for many years here, and I've seen the event grow over that time in different ways. I really love the format of the event. This year's event in particular really values the workshop and the individual, kind of working session, as well as networking is highly valued here. And I really like that approach. It allows just for many more human touch points and interactions to occur. And I think that's where a lot of the value comes from that discussion. It's really been nice to see new faces here. I've seen quite a few emerging groups and even events around emerging groups. Those even from not just the United States, but also internationally now. So I've seen a lot of changes to both the attendance and who is coming, as well as the format of the event. And those have been really well received.
Awesome. Great. I'm glad to hear that it's received. We're always trying to, build on where we've been. So glad to be recognized there. So maybe just kind of touching base a little about, the work you do with Revere. So, you were the founder of really the first and only venture capital fund focused primarily on oral health care. So you have a very unique perspective for this question. What do you see as the most meaningful piece of innovation today in the oral healthcare space, and how it's going to be impacting the DSO industry and the dental industry generally?
Yeah, so it's a really important question, and let me just start with a little PSA on State of the Union here in terms of data, right? Because Revere has seen over 4,000, maybe 5,000 companies organically apply to us for funding. That's 2 to 3 a day. Right, we track about 120 structured data fields on those. And so we're sort of like a pitch book plus diligence level data plus those relationships. And they come back to us for multiple rounds, right? So you're talking about 8,000-9,000, transactions here. What we're currently seeing, if you take seed and Series A stage companies and you compare them over the years 24 and 25, right? And you look at a few different cuts of that data, what you're really seeing in terms of round size is that currently in this year, 26, the round sizes are up. So average round size is now about 3 to 4 million, right? Even if they do a bigger overall round, then that means that they'll do closes of about 3 to 4 million, even if there's rolling closes or tranches there, right? So that's one really good thing to see. These companies are getting funded, right? And more funding at one time, which is much more helpful for their growth. The second thing that you're seeing really is that valuations have ticked up a little bit, right? Not to the unacceptable, and overinflated levels that 2021 is, but we are seeing them come up, right? Which is a signal that these are being valued in the field. And then lastly, we're seeing revenue dip just a little bit. It's still very positive, right? But for investors like myself, that's a real inflection point, right? This is the time to invest in things that are really making a meaningful difference. Because if you compare that to the trend over in the DSOs, we're seeing a lot of focus on same store growth, right? Maybe even a little bit of slowing down on acquisition as a primary focus and really optimizing the practices that you have. That means adopting and utilizing a lot of technology. So it's an opportunity here to take that trend, or even the two trends, and overlay them, support the right companies, and increase that revenue, because this is when there's a lot of adoption and consumption going on. Come to the more direct part of your question, there's a couple of major trends that we're seeing right now, and I think I'll, for this purpose, juxtapose really two of them, right? One of them is, you're seeing companies in the space, let's just say of education, training your doctors, right? How can we bring training to the DSO? How can we have a learning management system that works for our organization, produces the content or the techniques or the materials that we want to teach our doctors, and especially supporting those clinicians, the associate, the hygienist, right? And train them, right? Really a people focus. It's tech enabled, a learning management system, but it's people focused. If you take that and starkly juxtapose it to the AI revolution, this proliferation of agentification, right? Yeah, we're seeing individual AI agents now for multiple different discrete functions in the practice. We're seeing a lot around revenue cycle management. We're seeing some around patient engagement and scheduling. We're seeing some around billing, certain ones around phone call analytics or management. There's a number of different agents, and now we're even seeing agents managing agents models. But the question for DSOs is what's real, right? And what fits within your tech stack? What's going to work for your organization? That's a more complex question that we at Revere help partner with DSOs and really figure out what technology is best for them. But I think those two trends of increased focus on education and how they can do that without high expenditure really contrast next to AI and where we can take workflows that are inefficient and optimize them and bring in tools that are less human, right? And more agent. So I think those are two kind of contrasting trends that are both working on the practice.
Cool. And are you seeing kind of DSOs fully embracing these technologies to be deployed?
I think they're taking a skeptical but optimistic approach, I would say, which is right. They should look at these technologies carefully and closely. They should really understand what is compatible with their stack. They should really understand if they're going to invest the time, the effort, the money into making these technologies work, which ones hit their KPIs that are most meaningful to them, right? Otherwise, they're just shiny objects on a shelf, right? They're just nice to haves, right? But the DSO has to sit down and holistically and internally decide each year, what are the few key objectives, especially those that are technology driven, that they have to hit this year?
Got it.
Right. And I think that's where it becomes a careful decision.
And what role do you think ADSO should be playing in kind of helping promote technology more for DSOs understanding and how to deploy it, where to play? Like what role should we be playing and what kind of content should we be helping provide it?
Yeah, I think it's advocacy. I think it's education. I think it's democratization, right? How do you make this tech, first of all, available to DSOs so they can see not just two solutions that are in set, but if there's 8 real players, who are the 8 real players, right? I think that's one piece. I think education about how they work and even just how to diligence them. I'll tell you, I overhear a lot of conversations on the exhibit floor that have questions that are mismatched, right? Or misappropriated in that conversation, right? There are ways to structure that diligence conversation and really figure out if it's a fit. And that has to be done in a careful way. And I think there's a lot of education around doing that. And I think overall, supporting the members, especially if they say, hey, look, we've decided this is a key strategy. We've decided that either this is the solution or this is the solution set, but now we need more help. We need somebody, a professional organization, to jump in and help us, either on the diligence side or maybe it's on the implementation side. And who are those vendors or professional services firms that are trusted in the space? So I think it's really those levels of education and democratization.
Yeah, I think you're 100% right. Just kind of telling them what's out there and kind of making sure that they have access to it. So
let them decide, but show them the way.
Right. So kind of one of the last questions I want to ask you, jumping back to this year's summit, what are maybe 1 or 2 consistent themes you're hearing from people about this year's summit? Anything that's kind of tying everything together for you, or anything that's jumped out that people are mostly talking about?
Yeah, we certainly hear a lot in terms of how are we going to find the next practice to acquire, whether it's now or it's later, right? And what does that look like now, given the financial environment that we're in, right? And that this is, of course, if you have an acquisition strategy as a DSO. And finding those practices, whether they are distressed or whether they are excelling, and if that model's changed for you, and if it has, how are you now going to work with this new asset? It's very different to work with a distressed asset, versus one that is really on a high growth trajectory. So finding those practices, how you're going to diligence them, how that process has changed now that there have been a lot of different financial changes to our general ecosystem. And then I think it's a similar conversation, but at the PE level, right? Depending on where the DSOs are with their backers, right? They're wondering, when is the right time to go to market? Who are going to be the investors? We've even seen some alternative models, some IPOs, some insurance companies stepping in on ownership, some foreign investors come into the market. And when does the traditional PE pick up, right? How does it change from some of the over-leveraged deals, right? What about the legacy players who are getting wiped out right now, or their second bites at the apple are getting wiped out? How is that going to look for me, especially if I'm X number of years in to Y number of years that my PE wanted to hold this asset, right? I think there's questions on both the growth side and how that changes, as well as their PE sponsor and how that changes or looks.
Any final thoughts on anything we've missed here? Any final thinking?
No, I think the one thing to impress is, and maybe two kind of rules of thumb is, I think we've seen a little bit of rising tide floats all boats. Right. It always is very refreshing to see that even DSOs who compete in the same markets or have similar models really have come here, especially in the face of innovation, and some of the themes that impact all DSOs. I think we're, everything from regulatory to technology, we're seeing DSOs really work together. And then I think the other thing that's key is the leadership, right? I've seen a high caliber leadership show up, and I can't impress upon everybody how important that is, that you need a leader who can navigate through difficult stuff. You don't need a leader who's window dressing, right? They have to be able to come into the organization and really navigate it in today's waters, right? Not yesterday's waters, and who knows what 10 years away from now waters are, but in today and the near future's waters. And so I think big emphasis on collaboration and how you're going to managerial leadership within the organization.
Well, with that, Jeremy, thank you so much for being on, and thanks to our audience for listening. And we'll be sure to get more from Jeremy at a later time. Thanks, Jeremy.
Thank you.
Thanks. Hey, DSO, something that keeps coming up in my conversations with practice leaders is AI vendor fatigue. You've got 5 completely separate tools, all trying to run different parts of your front office. None of them talk to each other, and your team is spending hours every day trying to manually fill the gaps, which is costing you time and revenue. Quick pro tip. The group pulling ahead right now have figured out how to consolidate, and Flossy fixes that. They're quickly becoming one of the most trusted AI agents for DSOs. 4 purpose-built agents that replace your entire front office and actually work together. We're talking every patient interaction across phone, SMS, and web chat, plus inbound and outbound conversations that actually convert. Automatic insurance verification before every appointment, schedule and revenue optimization so you're always maximizing net production for every office, and deep analytics across marketing campaigns, your call center operations, and team performance. Not spread across 5 different platforms, but working together in one unified place. One platform, one integration, everything is connected. And a team of agents that work together. Plus, you can actually chat with them like an employee, and they become smarter and more reliable every single day. Visit flossy.com/ADSO to chat with the Flossy team. I guarantee you the groups that figure this out are going to be doing significantly better than the ones who wait.